Hello, it's Michael Hewson, Chief Market Analyst at CMC Markets, and looking back on a fairly turbulent week for stock markets. Looks like a negative start to the month, dominated by earnings, but also by uncertainty in the US banking sector. We've seen further declines in the likes of PacWest Bancorp, Western Alliance, on concerns about the resilience of that particular sector, deposit outflow. It's overshadowed, I think, broadly the central bank meetings that we saw this week, where we've seen 3 rate hikes, one from the RBA, which was unexpected and has prompted the Aussie to eat its Weetabix and pop significantly higher. And it's, I think, shifted expectations about future rate hikes there. We got 25 basis points from the Federal Reserve. We've also seen 25 basis points and a step down from the European Central Bank. What's particularly interesting about both those particular decisions is that bond markets appear to believe that we've seen peak rates for both the Federal Reserve and the European Central Bank. The US 2-year yield, the German 2-year yield are both down for the second week in succession, which suggests that while the narrative from the likes of Jerome Powell from the Federal Reserve and Christine Lagarde from the European Central Bank, that potentially we could see further rate hikes over the course of the next few months, bond markets aren't buying it. That's prompted the markets to come off their highs. The S&P is still finding it very difficult to push through that 4,200 area. And as we look ahead to the upcoming week, the attention now shifts to the UK and the Bank of England, who I expect to follow suit with another 25 basis points rate hike at their Thursday meeting, as well as potentially changing their forecasts for the UK economy, as well as inflation. Unlike US 2-year yields and German 2-year yields, UK gilt yields are holding up fairly well, which would appear to suggest that perhaps bond markets and investors aren't as confident about the outlook for interest rates when it comes to the UK economy. Got UK GDP, first quarter GDP, confounding expectations. Potentially, we could well see a quarterly expansion of 0.1%. On the earnings front, we've got Rolls-Royce, first quarter numbers. They returned to profit at the end of last year. Best performer so far this year on the FTSE 100. We'll see whether or not they can sustain that momentum. And second quarter numbers from Disney. Will the job losses that Bob Iger announced earlier in the quarter start to put some impetus behind that share price? Well, that's it for this week. Thank you very much for listening. Michael Hewson talking to you from CMC Markets Connect.